So we'll start with our next panel discussion right away. I would like to invite our panelists here on the stage with me. So this panel discussion is about innovation in wealth tech. And of course, first and foremost, I'd like to invite our moderator onto the stage. It's Andrea Benito Araúzo. Andrea, are you here? She is here. So put your hands together for Andrea. She is the editor at CIO Middle East. And of course, Andrea oversees the editorial direction of CIO in the Middle East, tasked with creating localized content and building an engaged community of technology leaders. CIO Middle East is the resource for CIOs looking for insights on intersection of business and tech, enterprise tech platforms, customer centricity, and more. CIO Middle East shares best practice examples and creates a community of CIOs who can share relevant knowledge and peer experiences. So our speakers for this particular panel, I'd like to invite Mr. Sandeep Jadwani to come onto the stage, please. Sandeep works for Habib Invest. Sandeep Jadwani is the head of investment advisory, ACSI CIB, and also is an award-winning certified and qualified investment advisor. Let's hear it for Mr. Sandeep Jadwani, looking very dapper in that suit. All right, moving on. Our next speaker for this panel is a speaker that we've seen in the morning, and we're going to see him again. It's Mr. Alan Zettelmann. He is the CEO and founder, InnoConsult OU. Am I taking the name correctly? Well, I'm among the few ones who are doing that, I guess. Helping to make innovation strategy for your company. So let's welcome Mr. Alan Zettelmann. The next speaker I'd like to invite is Mr. Christian Farioli, who's the CEO, ESD Dubai. He is also a digital strategist, lecturer, keynote speaker, and a book author. You're giving me a complex, sir. Please come onto the stage. Let's hear it for Mr. Christian Farioli. And last but not the least, I'd like to invite once again onto the stage as a speaker, Ms. Mila Khrapchenko, who's the co-founder, Amity, an angel investor, a startup co-founder, and a professional in structured finance with overall experience of 20 plus years. And she looks gorgeous as well. So once again, let's hear it for Mila Khrapchenko. And of course, they're going to discuss innovation in wealth tech. So I'm going to hand it over to you, Andrea.
Thank you so much for this lovely intro. Well, I guess everyone is so hungry. Everyone is still having lunch.
I think, yeah, they are still having lunch. But don't you worry about that. They'll be here.
No, thank you so much for your time. Thank you.
Here on the stage, I'm sure they are behind you.
They are the stars and just the journalists. Hi, I'm Andrea, editor at CIO Middle East, part of IDG Communications. For the next 30 minutes, we are going to discuss about the global wealth management industry. But first of all, I'm going to ask our four amazing panelists to introduce themselves. Please, Sandeep, if we can start with you.
Yeah, thank you so much. I think it's a fantastic time to bring up a lovely subject like wealth management and wealth tech, okay, and post-lunch, because it's not as heavy as embedded finance or regulation, but it's more fun and something that makes money. And this is what I've been doing. I've been awarded as the advisor of the year on a couple of occasions since 2015. And I've been in the region for 15 years. The best what I do is ensure that my rich investors remain wealthy. Okay, and you could go haywire, but I think with more discipline and more literacy, the rich remain wealthy. And this is what I do.
We'll go with you, Alan.
Thank you. So Alan Zettelmann, for the ones who didn't saw me this morning, thank you very much. I'm amazed with the whole content which I hear until now, and also love innovation in wealth management because it's a topic which is evolving in an amazing space. with a lot of impact with projects. And we in Innovation Consult are measuring the innovation IQ, which help investors to be safer in the selection of the projects.
Thank you, Andrea. My name is Christian Farioli, and I've been launching digital marketing campaigns since 2003, starting in the sector of B2B, where nobody knew even what the word digital marketing was about. And then for the last 12 years, I've been also teaching digital marketing and artificial intelligence and fintech to the largest organization, not only in the Middle East, but globally, to the point that I realized it was the time to start myself to put a foot into one of them. And I'm also part of the co-founding team of Jingle Pay, one of the neobank that we launched last summer. At the same time, I'm a firm believer that technology should help a financial institution into filling the gap between banks and fintech. And that's what I've been devoting the last few years of my career and my life into it. Thank you.
Hello, everyone. I'm Mila. I come from originally banking, so I probably know inside out all the pain points about wealth management from the bank side and from the client side as well. After having spent about 19 years at a bank, I worked at a broker and there managed to launch a product that would allow clients to invest in private equity space. And that was a very big success. And there, at that point, I realized that this is what a lot of people are really willing to do, not just to invest in promising startups via angel investor communities or via crowdfunding platforms, but they need to have a chance to invest somehow in a different manner. And since then, I've been in Israel launching my startup that exactly solves this particular problem. I'm also an angel investor. I'm a big fan of investments in the public markets and happy to greet you all.
Thank you so much, Mila. Thank you, guys. I'm going to start with you, Mila, with a simple question. What is WealthTech and how does it encompass the application of technology in the wealth management industry?
Thank you, Andrea. Well, if I would to answer in a very brief sentence, that WealthTech is a very broad set of technologies that automates and simplifies the process of wealth management. It can be applicable in many spheres, in investment process, in risk management process, in the way how the clients are onboarded, and we spoke a lot about that. Or in such areas where previously only large checks could work for investments, like democratizing real estate, for example.
Next question is for Christian. Christian, in what ways does WealthTech benefit wealth management professionals and their clients?
Sorry, again?
In what ways does WealthTech benefit wealth management professionals and their clients?
Right.
How does it enhance with efficiency, transparency, etc.?
Right, clearly. Most of wealth manager, they fear at the moment WealthTech because they feel that there is a technology that's gonna replace them, which is in a sort of way is actually true. So if you are in wealth management, you should be afraid a little bit. But if you're smart enough, you can use the tools to your advantage because they can help your clients understanding better what they like, and they can help better yourself understand better what your client like. At the same time, if you're not focusing on tiny little customer, you're focusing only on the big guys, you need technology to help you managing the small one. And that's where WealthTech came into the game.
Thank you so much, Christian. Sandeep, can you explain how WealthTech solution provide access to alternative investments that were traditionally limited to institutional investor or high net worth individuals? How do these solutions democratize access to a broader range of investment opportunities?
So just taking you a few years in the past, what used to happen was we used to hear the big investors or the big fund managers like the BlackRocks and Fidelities of the world saying that they have come up with a hedge fund which is investing in startups. Let's give a household name, which was SoftBank. Okay, SoftBank that reached out to a few sovereign wealth funds, raised a lot of money with the excitement And then we realized that there are few multi-baggers, and most of them didn't really do as well. There were regulatory issues. Now, but the media frenzy around that really got into the heads of retail investors. They said, why can't they invest when they have the risk-taking capacity, capability, and are willing to take that risk? So what happens is that WealthTech really fragments this down, pools investments of various retail investors, even if it means $100, okay? Collecting that money, reducing the cost, okay? The cost of transaction, and in fact, giving exposure in a diversified way without risking too much. So WealthTech enables to reduce risk to an investor compared to putting in larger chunk. Because what used to happen in 2015 or 2014 is a banker would go to an investor and say, hey, Mr. Investor, the only amount that you can invest is $1 million. Okay, and the investor wouldn't have those $1 million, but still would be thinking that how do I do that? And if I get $1 million, do I invest everything in a single investment? It defies the theories of investments, right? It defies why would you invest? Because diversification at the very core of wealth management is the basics, okay? Management and wealth tech typically helps generate access to these global VC funds, creating or plugging in crowdfunding platforms, even to buy art today. So someone could say they want to buy into an art which they are more confident about, and they could go to these wealth management platforms and put in even $100. If they have $10,000, probably $1,000 towards alternatives would really give them the access that only was limited to the rich people some time back. And this can only be based because of technology and advancements. Okay, so that's how things would work out, because without increasing your cost as a provider, you can provide all these products and scale up on a cloud-based platform based on your traction that you generate and the likes.
Indeed. Thank you so much, Sandeep. Alan, I got two questions for you. First of all, what technologies are changing the wealth management industry the most?
Well, the first thing I think really impact the wealth management is the RegTech, which are giving a solid basis in order to apply the technology, in order to speed up the processes, to automate the processes, to make the processes legal. And in this sense, you will reduce the costs. So this enable also that you have more adoption. With more adoption, you have more data. With more data, you can do more things with the artificial intelligence. And artificial intelligence helps you to work out all this called big data, data lakes, in order to process vast amounts of data, generate with algorithmic new results, and make better decisions.
We will discuss on these technologies soon, but before I wanted to ask you, because you are the expert on innovation, and every time we speak, you talk about innovation IQ. Maybe some of our guests, they don't know what it is. And you say companies with lower innovation IQ will disappear. Could you explain to us what is innovation IQ? How are these entities measuring the most important pillar for the future?
Yeah, if we give a look to the SP 500 and the lifespan of these companies in the last 30 years, they reduced from 35 years to 12 years, the lifespan. So why this is happening? The problem is the bigger companies are not able anymore to follow the pace of change because it's limited by the humans which are informing these companies. And what we need to do is to measure the innovation IQ, so the capacity of the company as an entire group to interact, leadership styles, persons, and different organization models of the different horizons in which the companies organize their projects in order to sort out the uncertainty, lowering the risk, and we are measuring the innovation IQ, so we get unique score, which it's based on vast amount of data which we generate from the company, and are able to decide and give an orientation in how good will be the company in the future for future innovations. So, and this is the...
Thank you, Alan. I moved to Mila. Alan was mentioning technologies like big data, AI, and please, everyone, feel free also to jump into this question. But Mila, go with you. How are new technologies like such as big data, AI, machine learning shaping the development and evolution of WealthTech?
That is a great question, and if I go into too much detail, I probably will spend all of our time.
We have time.
So
no worries.
let me concentrate on certain things. First of all, big data really helps in profiling of the clients, and that is what allows, if in addition the client is setting his or her particular goals, it makes much easier to create the right portfolio for such a client. So that massively drives increases efficiency and allows smaller check, about which Sandeep was talking about. So if previously a wealth manager client should necessarily go with $5 million and speak to fancy Swiss bankers, now I can do everything online. The system will ask me a few questions. It will process my data and provide me a recommendation. The second thing is that it is incredible that there are several resources that I personally use when I trade. For example, there is a company called TradeSmith in the United States. They cover all kind of 5,000-6,000 stocks that are traded there, which is absolutely unfeasible for a research analytical firm, or you need hundreds of analysts to cover all big techs, small techs, pharma, consumers, and so on and so forth. And they manage to get all the data, and all the data implies that you follow each and every trade that happens there in the market. You have all the announcements that come out with respect to particular companies, monitor whatever reports they submit, and you're able to combine fundamental and technical analysis in an incredibly efficient manner. And if I am a client of this platform, I can even put that I would like to follow Warren Buffett and create a portfolio closer to his, or maybe Ray Dalio or someone else. So this is another example how artificial intelligence drives really the way we invest and the way wealth management works. And their machine learning simply makes these models more efficient, less more prone to errors.
Thank you, Mila. Christian, Alan, Sandeep, is there anything you would like to add? Any example about how these technologies are leveraging the WealthTech?
So I think technology, again, plays a major role. I've been a wealth manager for over 15 years. I still do what I started off with. Earlier, what used to happen was we would go to an investor, take certain bunch of term sheets and say, hey, Mr. Investor, this is how your 100% of the money will be divided. Okay, because this is high risk or small cap companies, we will allocate a smaller amount based on the model portfolio theory, which is a Nobel Prize winning theory for investment allocation. Now, fast forward 5 years from there, everything got digitalized that you can make models on your system. So you really don't have to take term sheets along. You only take one term sheet which says this will be your model portfolio, and that's about it. Your money gets allocated automatically. What happens is, as the inefficiencies in the markets come up, your portfolio, which started off with certain asset allocation, would not be on similar asset allocation as markets move up and down. So there's a need for rebalancing. What used to happen was your banker would come back again to you and say, hey, you know what? Right now, your equity component is beyond the 80% that was allocated earlier, and your bond portfolio has gone down. So we need to rebalance. the rebalancing could be way ahead in time or much later, but it was still manual. Fast forward from there, 2015, 2018, auto rebalancing strategies started coming into portfolio planning and portfolio construction. Today, you can actually tweak the model portfolios to each individual's requirement. So consider this. You go to a retail store to buy a suit, okay? Everybody is different. So you would either buy something that is small, medium, large and try to fit in, or you buy that and tailor it slightly, or you go directly to a tailor, okay? If the tailor does not have the means to stitch your suit, he will not provide a good quality. But today, as wealth managers, we have all the tools available to remove the emotional biasness that we have with the added layer of technology, which will be based on quants, okay? And clients, because the clients are onboarded on a certain platform, the client education journey starts from the beginning. And educating the clients on what the underlying investment is and what are the various aspects available, okay, that really drives penetration, okay, which means today when we see so many people talking about alternative investments, talking about VCs and PE, this was not the case before. Today's investor, a retail investor, is also equally educated, but he does not have the means to enter. And the WealthTech platforms really bring out that flavor so that a retail investor could invest in pre-IPOs of companies, could invest in seed funding or series A and B of any other company that he feels good about, where there's a purpose of that company, rather than just investing in a passive S&P 500 ETF and sitting back, okay? To get that extra alpha and edge on the monies, education is the first step and the access.
Absolutely.
Because if you have education but no access, you won't do anything. If you have access but no education, you'll take the wrong steps. So WealthTech platforms ensure there's convergence of education or literacy with the access to products and solutions.
Yeah.
Thank you.
Just to add something on top of what Sandeep and Mila already mentioned, for me, the big deal about artificial intelligence and big data is that they are heavily involved in analyzing and predicting data. So something that no human can do. So once even we talk with the wealth manager, he has a lot of information and he needs to ask us a lot of questions. Well, in fact, all of this information and a lot more are already available at the platform level in a form of big data. And with the right AI algorithm, they can be understood, analyzed, and get the perfect option for the investor.
Yeah, Christian, I will continue with you. We were talking about education. Could you elaborate on how WealthTech companies are leveraging gamification techniques to engage and educate users?
Right. For me, one of the best example is Robinhood. Robinhood is probably the #1 broker company in United States, which also use gamification to make sure that investment is not just something for savvy investors, for banker, for financial institution, but is something for everyday user. Again, it's something that has been traditionally built by bank with the bank in mind. And this is what the standard regular customer don't understand. It's like a doctor. When a doctor talk the doctor language, no patient will understand what they say. So once they realize that they need to speak the patient language, then patient understand. And the same thing is with broker and finance. Once the application, the system are built by people in finance, they speak a language that traditional investors, they are not familiar with. And gamification is the perfect example. Once you play it like a game, you play finance like a game, it's bad to say, but it hooks you up. Even if sometimes you lose a little bit, you win a little bit. It's a paradigm like a gambling, like a casino, which is obviously, is definitely the opposite of trading. But it gives us the idea that once a trading platform or a trading system or a wealth management system is gamified, then involve more user, easier, faster, and keep them enrolled for longer. And especially avoid them to switch to a competitor. Because what's the point of me having the money in your broker platform or another? They are all pretty much the same. But if I get some sort of gamification, I stay attached to my platform. and I don't think about changing it. Thank you.
Thank you, Christian, for sharing your insights with us. Alan, with the rapid innovation and adoption of WealthTech solutions, what potential risks and rewards do industry participants need to consider?
Well, the highest risk I see is that all these blockchain projects which you have outside, they are not really mature. For example, Governmental Blockchain Association, GBA, is offering a maturity model, and only the United Nations blockchain is really on a very, very high level. So this is a point where we need to really take care, because today the maturity of wealth management projects is taking in consideration that the lawyer of the company need to understand how to write a smart contract. And I will challenge you to ask your CTO if he is able to talk with a lawyer, and the lawyer should write 2 pages contract in a smart contract. This will be a 1.5 meter workflow. And imagine a 10,000 lines smart contract for a lawyer could be not that easy as we imagine everything that's happening as fast as a click. From the other side, if we take in consideration that we are auditing the processes and looking for maturity models, I think there is another threat. This is the cybersecurity. So from one side is the management risk on doing the things right with the right actors inside of the management team. From the other side is we are underestimating the cybersecurity threats, and normally we do it by negligence that we don't know what we don't know, and these systems are also evolving in a very fast speed.
Yeah, absolutely. There must be a synergy with cybersecurity. I have an open question for the 4 of you. Please feel free. Can you share some examples of disruptive startups operating in the WealthTech space?
So let me start. Today, the WealthTech space is very, very fragmented. What are the 3 pillars of any WealthTech platform? It is about money coming in, or analyzing where is the money flowing in coming from, how long is the money sitting, and what portion is going towards expenses versus what is left towards allocating to investments and insurance. So this is the entire value chain of, or the flow of money towards creating more value and wealth. And the client today, or the user today, just knows 2 things: money coming in and money being spent. Okay, well, it should usually be the other way around. What is the money that I need based on certain goals and objectives in X number of years, and how do we start planning the flow of money from there? Okay, so today you may have a full-blown platform for insurance only. You will have a full-blown platform for stock trading. You may have a neobank that is providing you with digital bank accounts and credit cards, but most of them may not be linked, and the data may not be shared. Okay, so a pure wealth tech platform, or a wealth tech provider, or a bank who is sitting on big data should be able to provide these services where they track the flow of money, where it is coming from and where all is it going, and then end of every month or every quarter give out analysis that, hey, Mr. User, you have spent more on eating out compared to what your target is, and if you continue spending the way you are, you will not achieve your desired goal in the desired time frame. Now, embedding real-time data about economy, like interest rates moving up, giving out more responsive information by saying, stick your money into a deposit which will today give you 5% plus, rather than spending it off on expensive things. Even if you are prone to investing, there should be vouchers or discount codes given out saying, if you use this within our partner network or the networks that you are usually spending money, you will save up more and eventually become richer and financially independent. So the whole idea about wealth tech should be reaching financial independence and being financially literate to take those decisions ahead.
I would like as well to share an example created by the guys of Supernova Labs, for which it's because of them that I've been invited here today. And there is a system called Invest Suite, which is basically wealth tech as a service. And it allowed any bank to become closer to a fintech with minimum time. For example, the normal bank or financial institution have data showing to customer in a typical way. So what this company is doing is transforming the data and giving a history or a story about the data. Instead of saying you should invest in this stock and that's it, and giving you up and down, they tell you the stock based on this, based on that, and based on your appetite for risk, etc., is the good stock for you because XYZ. So basically, it speaks like a human, the language that customer understand. And this helps financial institution to become more appealing. So imagine it's like if a bank, if financial institution want to become like a Robin Hood, it's going to take 5 years at least to build a platform like that. With wealth tech as a service, a banking or financial institution in 3 to 5 months can have their own Robin Hood platform developed. So this for me is filling the big gap that is going to make any bank look more like a fintech.
Mila, please.
Yeah, maybe we can also mention not something that works as wealth tech for the banks, but also something that is out there for B2C customers. Christian mentioned Robinhood. Another example of such solution could be eToro, where you can do fractional ownership of shares, and this is why they became so popular, and you can trade multiple things. Or another example could be, for example, Yield Street, where you can invest in real estate. And we will, by the way, have a great speaker today, Anastasia, and she will tell us about one of the wealth tech projects also. And we also spoke about multiple crowdfunding platforms to invest in alternatives, like the outstanding of those are probably our crowd from Israel. They've been there for many years. Or Moonfair that allows to invest in different private equity or venture capital funds. Or AngelList, which pioneered so-called rolling funds among early stage venture investors. So there were multiple platforms, which yet I think to be somehow united within some more global solution that a bank can use. But what we come often across that if I want relatively, I wouldn't call very basic, but if I want relatively straightforward stuff as a client, as an investor, I probably will find something in the market that is there for me. Either I want a research, or I want to do some technological trading, or I want to invest in something. But if my requirement for wealth tech solution is some very comprehensive asset allocation, I will still need to go to the banker. I don't think that there is a universal solution that addresses that.
Thank you, Mila. Quick question for everyone before we finish. Where do you see the future of wealth tech in the next, let's say, 5 years?
We are already in the future, as I would say, but the future really is a single platform based on your identity more than based on your bank account. Okay, a single platform which aggregates your data, expense, money allocation across platforms and giving you one consolidated picture of where you hold, how risky or risk averse it is, and where it should be on an optimum level when it comes to financial planning as well and wealth tech, not only including the stocks and bonds and investments, but also your insurance, okay? Because today this is the most ignored one, and there is no loyalty on insurance because anyone who provides a cheaper quote, even if it's for a car insurance, we just go and sit there. But aggregating global data of an individual based on identity is what wealth tech should be. in an ideal scenario, and then giving access to risks and objectives based on real-time data.
Alan?
Well, I think that we are at the very, very beginning of something which will speed up in a incredible speed, where we humans will not be able to really understand what's happening. We are always talking about things which are imaginable and with names and a language which is being used the last, let's say, 50 years. Maybe new words from the science fiction books from 1998, like an avatar or something like this. But regarding the WealthTech, I think the decentralized identity will play a role, and also this decentralization and a lot of new asset classes, which also by allowing the lower threshold of the investment of the people will get access to a bigger crowd, like the whole young people from Africa with very little amounts of money, giving them access also to the higher investment returns, like proper investments. And this will generate something which today we are not able to imagine how it's going to work.
Thank you, Christian.
For me, in a few years, I can see that banks are becoming like supermarket of fintech. They're going to be like a container that contain any type of edtech, WealthTech, fintech, and who knows what tech is going to be tomorrow. Where actually the bank is just going to be the container with clients, with regulation, with everything. And the little fintech, ultra advanced, is going to provide that specific service or that specific niche in totally transparency. Exactly like the supermarket is the place that sell third-party goods, but still people get attached to the bank, not to the little fintech. So that's why I believe that banks that are going to following this model are going to be prevailing.
Thank you, Mila.
I would say that I was going to say exactly what Chris said. And I think that the core thing in the future will be creating the right ecosystem. You can call it supermarket, you can call it ecosystem, but basically the world is moving towards better inclusivity rather than exclusivity. So very exclusive products, investments, offerings, or many things you can provide under the bank umbrella. And on the one hand, it seems like, yes, banks already possess a lot of data, but in principle, we have seen different models as well. We have seen that sometimes these huge ecosystems, they arise on the base of mobile operators. So that's another opportunity that I potentially see.
Thank you. Well, we are running out of time. Mila, Christian, Alan, Sandeep, thank you so much. I'm going to ask the audience, please, big applause for our speakers.
Thank you so much, ladies and gentlemen. If there are any questions whatsoever, you can take them now. So I'll give you the next 2 minutes for the...
And the best question, by the way, is going to get my book for free.
What do you do for a living, Chris? I'm just kidding. So any questions, anyone?
I'll take the liberty to say something that WealthTech will actually enable everyone to go from a millionaire to actually millionaires. Okay, and it's just about being educated, taking the education and access. Okay, if these two things converge, it is about inclusivity for everyone. Because with knowledge, you can do only this much, but with access and knowledge, you can do almost everything.
Brilliant. Brilliant to sum it up.
One question, guys.
Yeah, any questions? Anyone? Well, I am a millionaire. I would love to be a millionaire, so I'm going to come and talk to you. Thank you so much, gentlemen and ladies, for being here with us. And this was a very fruitful session. Thank you once again.